Hello to everyone. Today I am here with Financial Management Bond and their Valuation Part 3. If you are interested to have update videos on banking and finance related topics, please do subscribe my channel. In this session, we are going to cover yield to maturity, current yield, capital gain yield, and the calculation of yield to maturity, current yield, and capital gain yield. On the other side, yield to maturity, current yield, capital gain yield calculation from premium bond, and thereafter for the discount bond and their overview. Yield to maturity calculation. Yield to maturity is the rate that implied by current Brown price. Bonds are offered on par value, that is equal to face value. On the other side, on premium and on discount. Finding the yield to maturity is the process for finding the return on the bond with an annuity. Here, annuity is the equal series of coupon payment. That may be annual, that may be semi-annual, that may be quarterly or monthly. Current yield, annual coupon payment divided by current price. If the bond is offering at par value, it will be divided by the par value. If it's offered on premium, so it will be divided by premium price, and if it is offered on discount, will be divided by the discount price. Capital gain yield, change in price over beginning price. Expected total return is yield to maturity, that is equal to current yield plus capital gain yield. In case the bond is offered at par price, so the yield of maturity remain the same, equal to coupon rate. But when the bond is offered on premium or discount, yield to maturity will definitely change. In the first case, we are going to discuss if the coupon rate is known but the bond is offered on the premium. Here, when the bond is offered on premium, we are not known about the yield to the maturity on the bond. Here, a bond with a face value of 100,000 and a coupon rate of 16% has 15 years to the maturity is offered at a premium price of 120,000. Calculate bond yield to maturity, current yield, and capital gain yield. Coupon rate is 16%, face value is 100,000, premium value is 120,000. Here we have to find yield to maturity, current yield, and the capital gain yield. For the bond value, in order to calculate the bond value, we have the formula, that is the coupon value multiplied by 1 plus k power minus n divided by k plus FVN divided by 1 plus k power n. If the bond having a 15 years maturity is offered at a premium price of 120,000, it means the return on the bond should be less than the coupon rate. Here coupon rate is 16%. To calculate the yield to maturity, we must find two values. Both is closer near to the premium value. One is less than and other one is greater than the premium value. It may require multiple attempts. Now here we will try by applying the different rate, and we need one value that should be near to 120, less than the premium value, and other value should be above 120. Here we have calculated, after having the multiple attempts, the bond value at 13% comes to 1193 87. And on the other side, bond value at 12%, it comes 127,243. At 13%, it's less than the premium value, and at 12%, it's above the premium bond price. It means the yield to maturity falls somewhere in between 12% and 13%. 12% we have taken as the base. So first we are going to have the difference with the initial bond value, that is 120. Difference come to 7243, and on the other side we are going to have a difference between the value at 12% and 13%. It comes 7856. So the value is falling in between somewhere between 12% and the 13%. So yield to maturity comes 12% plus 7243 divided by 7856, and the difference in the percentage, that comes 0.01. So it is equal to 0.92%. When we add 12% plus 0.92%, yield to maturity comes equal to 12.92. One thing you should keep in mind, always the difference of the value with the initial investment become a part as a nominal value in numerator, and the difference between the percentages comes as denominator. On the other side, current yield, it comes 16,000 divided by our initial investment, it is equal to 13.33. So here we have two values. One is the yield to maturity and other is the current yield. So the capital gain yield is equal to yield to maturity minus current yield. It comes 12.92% minus 13.33%. Here we have a capital loss of 0.41. It's the case of when the bond is offered at premium value. Premium value means the value greater than the par value or the face value. Here we have another example. If the coupon rate is known but the bond is offered on discount, a bond with a face value of 100,000 and a coupon rate of 16% as 15 years maturity is offered at a discount price of 90,000. Calculate the yield to maturity, current yield and capital gain. So coupon rate is 16%, face value is 100,000, discount value is 19,000, and we have to find yield to maturity, current yield and capital gain. We have the same formula which we have used in the previous example. If the bond having 15 years maturity is offered at a discount price of 19,000, it means the return on the bond should be greater than coupon rate. In case of premium value, the return will be less than coupon rate. In case of the discount value, the return should be greater than the coupon rate. So here we will again calculate the yield to maturity. We must find two values, both closest near to the discount value. One is less than and other one is greater than the discount value. Means you need one value above 1900,000 and one value below 1900,000. It may require multiple attempts. Now here we have calculated the bond value at 18%. It comes 89,817. That is below 90,000. And at 17%, it comes 94,676. It's above 90,000. On the basis of, again here at 17% is the base, it's more than 17%. The yield to maturity is more than 17%, but less than 18%. Initial bond value or our investment is 90,000. So the difference comes 4676 is become a part of numerator, and the difference between two percentages, that is 7856, it become a part of denominator. So we have a difference between the both percentages. 18% minus 17%, it comes 1% or 0.01. The yield to maturity comes 17.96%. Here on the other side, we have also calculated the current yield that comes to 17.77%. So the capital gain comes 17.96, that is yield to maturity, minus 17.77, it's the current yield. So here we have the capital gain equal to 0.19%. Thank you very much. See you again with the upcoming video with the same topic very soon.